Networth, the Indian markets this week continued to be in the green, giving some signs of respite. But on Networth this week, we will guide you about some investment strategies that can help you safeguard and enhance your net worth. Let's see what our team has got for you.
Shariah Compliant Funds are the new emerging trend in the Indian market. But how do these funds really work? I'll get you all the details.
Well, financial year 2008-2009 has just gone by, and I'll get you a wrap on how your equity diversified funds have performed in that financial year gone by. All this in just a bit.
With property prices on a downturn, there are new opportunities opening up for potential buyers. I'll tell you all about it later on the show.
In times of distress, many people turn to God. Shariah Compliant Funds, an interest-free alternative to regular funds, seems to have ironically gained the interest of investors. But what's the secret recipe for this one? Avni Raja joins us to give the divine answer.
Thanks for that, Priyal. First of all, let's understand what does a Shariah Compliant Fund really mean. Sharia refers to a code of law or divine injunctions that regulate the conduct of human beings in their individual and collective lives. This is the philosophy that comes into force for investments. There are certain rules which need to be followed so that a fund can be called a Sharia Compliant Fund. First of all, investments cannot be made in a company whose total debt is 1/4 of its total assets, and also in companies whose interest income exceeds 3% of its total revenues. Apart from this, a Sharia compliant fund cannot acquire shares of a company that provides financial services on interest, like conventional banks and insurance companies, as well as companies that manufacture or sell liquor, pork, tobacco, or are involved in gambling, nightclub activities, pornography, etc. And anyone who stands by this philosophy can use this investment avenue.
There are a lot of customers who would want to invest based on their, I would say, personal belief. There are customers who would want to do a socially responsible investments, and for the sake of diversity, defensive sectors and so on. So for these kind of customers, there are further options available in the market now, which are these kind of funds which are offered internationally in India also.
S&P has also launched two major indices in the Indian market, the S&P CNX 500 Sharia and the S&P CNX Nifty Sharia. The Sharia index has 37 out of 50 companies on the Nifty index. Experts say these restrictions do not compromise returns.
We did some back testing, and when we went out with our sample study, a lot of the investors were worried that we were compromising on returns by layering all these criteria and filters. And the backtesting results showed that over a market cycle, you actually end up at the same place as the broader benchmark indices like a Nifty or a CNX mid-cap. Well, we looked at how the Sharia index in India has done, which was incepted in December 2006. So from December 2006 until February, the broader indices had lost about 35%, and the Sharia indices had also lost about 35%. Now there might be bouts or brief periods of outperformance and underperformance, but more or less they move together.
In light of all this, companies have now begun launching Sharia compliant funds. Mutual funds like Taurus and Benchmark, as well as insurance companies like Tata AIG Life, are tapping into this segment. That's not all. Reliance Money has also launched a Sharia compliant portfolio management service. Benchmark Mutual Fund, for instance, offers the Sharia Benchmark ETF scheme. This scheme will be benchmarked against the S&P CNX Sharia Index. Examples of Sharia compliant stocks are Tata Steel, Hindalco, Power Grid, Tata Motors and Bharat Petroleum. For Taurus Ethical Fund, at least 80% of the fund corpus will be invested in equity and equity-related instruments and up to 20% in money market instruments. This fund has collected over 5 crores during the NFO period. Tata AIG Life has also launched certain Sharia-compliant products.
We have launched a couple of funds called Select Equity Fund and Future Select Equity Fund, which are attached to our unit-linked and unit-linked pension plans.
For the Taurus Ethical Fund, there will be an entry load of 2.25% and the exit load is 1% up to 6 months, 0.5% up to 1 year, after which it is nil. The minimum investment amount is 5,000 rupees. However, for the Benchmark Fund, there is no entry or exit load. So Islamic investments are without the existence of risk-free returns. Experts say that while the global banks were victims to the crisis due to mortgage-backed paper securities, Islamic finance managed to survive with its backing of tangible assets. However, the industry is experiencing slackened activity because it relied on the property and real estate markets. But with the global size of this market is estimated to be $700 to $1,000 billion, This segment is expected to grow at the rate of 10 to 15% annually. And experts say there is huge scope for this market in India for investors across the board. Back to you.